Hi there, Josh Knoll here with Gulf Coast Financial Advisors. We are a fee-based financial advisory practice located in downtown Fairhope, Alabama.
Hey, I'm Jay Stubbs. I'm the Regional Director with First Protective. We're a risk management firm that helps advisors like Josh on their insurance needs for their customers.
All right, Jay, we're going to dive into our topic today. I've been getting some calls lately, and people will call and say, hey, Josh, I'm interested in looking at whole life. Now, I know you've got some thoughts on that when a blanket statement like that is made.
Yeah, so when a prospect or a client calls you looking for that kind of solution and they say whole life, I like to ask some clarifying questions.
Okay.
Because there are a couple of insurance products out there that fit the terminology they may be looking for.
All right.
Whole life is a product type, but it is designed to be a fully guaranteed, all of your life, build cash value, dividend participating. Some components of the cash value are guaranteed, but definitely you pay the premium for a specified period of time, you have a guaranteed death benefit, and that's there.
Okay.
Sometimes though, somebody will say, well, I'm not real interested in the cash value component.
I just want the death benefit.
I just want a death benefit.
I just want to know death benefit's going to be there no matter how long I live.
Correct. So somebody who says, I want whole life, I will say, well, do you want a product that's going to be there when you die, no matter how old you are? Mm-hmm. Some people will say, well, I know I don't want term. So I like to also clarify, well, there's term and then there's not term.
Okay.
Term, as we are well aware, there's 10, 15, 20, 30, 35-year term. At the end of that term period, your product, the level premium is done. It has an increasing premium. If you want to keep the death benefit, you keep it. But through that lifespan of that term, temporary insurance period, mm-hmm. you've paid a premium, you get a death benefit.
Right.
Somebody says, I know I want not term. I want something
I want the opposite of that.
I want the opposite of that.
If I live past 20 years, I would like to still have some kind of coverage.
So usually if somebody is in their 20s, 30s, or 40s, and they want something that's going to be there no matter when they're 80, 90, 100, or longer,
right.
That's what we would say is a not term type of product.
Okay.
It could be whole life, but it could also be universal life.
All right.
So there's two types of products that are not term that an individual or a business owner or a family would look at. They would look at whole life. It's going to have a cash value component, mm-hmm. or they would look at universal life. It could have a cash value component, but we can also design universal life to have what we call no lapse guarantee.
No lapse guarantee, okay.
That would address that I don't care about cash, just give me a death benefit when I die, because as you and I both know, the best life insurance policy to own
is the one that's there when you die.
Correct.
Right.
So if we want that, we can actually design a plan that fits that individual's needs that doesn't really have any emphasis on cash value accumulation.
All right. Now, which one are either one of them flexible? You know, my life changes 10, 15, 20, 30 years from now.
Both are flexible,
okay.
to your situation, but universal life, I would like to say that one's much more flexible.
All right.
If you want to skip a premium payment and have minimal impacts on your policy, you can.
On a universal life.
If you want to If you want to reduce your premium outlay, you can. If you want to reduce your death benefit, you can.
Okay.
You can change lots of different components with universal life. In whole life, there are some things you can tweak and change throughout the contract.
Okay.
But you set up a plan, you're making a commitment. I'm going to pay this premium for 7, 10, 20.
Age 65.
Age 65, lifetime pay.
Right.
I'm going to get a guaranteed death benefit. I'm going to get a cash value component,
right.
some of which would be a guarantee.
Right.
But if 3, 4, 5, 7, 10 years from now, I need to change that plan, I'm limited on the changes that I can have with a whole life contract. Versus I can definitely make some changes on universal life.
Okay.
We're not saying any one product is better than the other.
Right.
What we're saying is we need to ask some clarifying questions based on what your situation is, so we can custom tailor it.
It depends on what your situation is and what you want.
That's right.
You know, I mean, because you have situations where it's really important to someone that they have yet another asset class that potentially they can tap into down the road. Some people, we have this conversation, they're like, listen, I want to know I've got X amount of dollars coverage coming when I pass, whenever I pass, and I could care less about the cash in it.
Yep.
That'd be a universal life solution.
That's a universal life with a no lapse guarantee component.
And some people say, listen, man, I want 20 years level term and then I'm good.
That's right.
Right.
And there are a lot of companies out there. And fortunately through First Protective and with you as an advisor, you have access for your clients to 20 plus insurance companies. some of which are very good whole life companies, dividend participating mutual companies, and there's a lot of good ones out there.
Right.
Some of which are focused on the universal life market.
Right.
So when we sit down with somebody, we want to ask them some questions specific to their risk management plan. They tell you they want whole life. We're going to ask a few questions. We're going to see, do you mean something there that's going to be permanent in nature? And I don't like to use permanent. Permanent could mean, I like to say not term.
Permanent could probably bite you in the butt at some point.
Yeah, because if we have some changes, if we skip a premium or
Right.
something like that,
Right.
we could have an impact on a policy that could not be there when we die.
That's right.
That's our job as insurance professionals, to make sure we're getting a client what they are looking for. So I like to say it's either term or not term. If it's not term, it's whole life or universal life, and the varying components between those two products.
Perfect. Very well said.
Yeah.
If you're interested in learning more, you can reach out to me. Again, Josh Knoll, Gulf Coast Financial Advisors. Jay, I'm going to say this is a new thing to add to the video. I'm getting a lot of private or PM messaging on social media. Hit me up that way. It's awesome. I love hearing that stuff. Josh.Knoll@gulfcoastfa.com or 251-327-2124. Mr. Jay's contact?
You can reach me, just Google jaystubbs.com, JAYSTUBBS.com, and my email address and phone number are listed right there.
All right. Thank you all for joining us today. This is Josh and Jay talking shop. We'll see you again.
Thanks.
Thank you for joining us today. If you'd like to learn more about Josh Knoll, visit gulfcoastfa.com, or you can reach out at josh.knoll@gulfcoastfa.com, or call us at 251-327-2124. You can find Jay Stubbs at jstubbs.com. That's JAYSTUBBS.com. Advisory services offered through Investment Advisors, a division of ProEquities Inc., a registered investment advisor. Securities offered through ProEquities Inc., a registered broker-dealer, and member FINRA and SIPC. Gulf Coast Financial Advisors is independent of ProEquities Inc. All the opinions expressed on this show by Josh and Jay are solely their opinion and do not reflect the opinions of ProEquities Inc. Thank you all and have a great day.